afternoon, ladies and gentlemen, and welcome to ETAF Weekly News. I am Gabriela Stan, and I'm happy to share with you the most recent developments at EU level on tax matters. The status of the OECD negotiations on the international tax reform will be discussed by the ECOFIN on March 16, and the recent progress reached at the end of February at OECD and G20 level shall play a relevant part in the discussions among the EU finance ministers. The virtual meeting of February 26 under the Italian presidency of G20 has reiterated a strong support of all G20 ministers for an agreement of both pillars of the reform proposed by the OECD inclusive framework. Positive signals came in particular from the United States Treasury Secretary Janet Yellen, which confirmed that Washington is committed to multilateral discussions to both pillars to reach a global solution. On March 3rd, the ambassadors of the member states to the EU have approved the negotiating mandate of the Council of the EU on the European Commission's proposal for public country-by-country reporting. After a 5-year deadlock, on February 25th, a qualified majority was reached to approve the text at the Competitiveness Council. The Econ and Jury Committee of the European Parliament have also approved the opening of the interinstitutional negotiations, and Evelyn Regner from Austria, together with Iban Garcia del Blanco from Spain, will do the main negotiations for the Parliament. On the same day, the ambassadors of the member states to the EU authorized the European Commission to open negotiations with China on establishing a basis for a possible future VAT administrative cooperation framework. The Commission plans a two-step approach. First, a Memorandum of Understanding, which is a non-binding instrument under EU law, and later on, if possible, an international agreement. The Commission will regularly update the Member States on the progress of these negotiations. The Court of Justice of the European Union decides on the case of 4 Spanish professional football clubs regarding state aid provisions. A 1990 Spanish law obliged all Spanish professional sports clubs to turn into a public limited sports company, with the exception of professional sports clubs that had achieved a profit during the financial years preceding the 90s. Football Club Barcelona, Club Atlético Osasuna, Athletic Bilbao and Real Madrid came within that exception and chose to continue operating in the form of non-profit legal persons, enjoying in that capacity a special rate of income tax. By decision of July 4, 2016, the Commission took the view that the respective legislation continued unlawful state aid by introducing a preferential corporate tax rate for the 4 clubs concerned. Barcelona brought an action against the decision before the General Court of the EU, which annulled the decision of the Commission on 26 February 2019 on the grounds that it did not prove the existence of an economic advantage for the beneficiaries of the measure at issue. In its judgment of March 4, 2021, the Court of Justice EU set aside the General Court's judgment. This is Today News. For further details and more information, please visit ETAF website. Also, don't forget to follow us on LinkedIn and share our tweets. Thank you for your attention, and please stay tuned here on CECAR TV for more EU tax news brought to you by ETAF, your voice in Europe. Goodbye and stay safe.